Hello and welcome to another edition of Stockwatch on this Thursday, the 15th of July. So as we're coming into the back end of the trading week, we are hearing more big banks in America releasing their earnings report, and this time it was the turn of Bank of America and Citibank, or Citigroup, let's say. And their Bank of America did underperform, unfortunately. Their shares did drop by 3% approximately, which we'll check out in a minute. After they posted second quarter revenue earnings. The company said revenue fell 4% from last year, and this was driven by a 6% drop in net income because of lower interest rates, lower trading revenue, and the absence of over $700 million gain a year earlier also hit revenue. So here's what the figures are like. It just missed estimates by 2 million. With the profitability, and the earnings per share of 80 cents were actually a little bit higher than 77 cents, but still that did not stop the share from dropping, as I said, by 3%. So quite significant numbers there. And there's a bit of a role reversal for Citigroup. They posted second quarter results that benefited from a $1.1 billion boost from releasing reserves the bank set aside for loan losses as well. So they were on the ball in that respect. So let's look at the figures as well for Citigroup. Well, it was $2.85 a share, topping the 1.96 estimate, and just over $17.4 billion in profitability, edging out 17.2 estimation. So that was quite significant as well. While the bank managed to top expectations in revenue, the figure declined 12% from last year, and obviously this is due to the pandemic, lower interest rates, etc. So on Tuesday we had the turn of JP Morgan Chase and Goldman Sachs, which posted good results, beating expectations. So we'll see what the rest of the earnings season is like as we get into it. So first of all, Bank of America, we saw this great accentuation. We saw shares dip in the middle of June, which is quite a significant drop. But as you can see here, the drop is even more significant because we've hit a recent low, which was almost a double bottom of the price that we saw recently a few sessions ago, when there was a bit of price action to the downside, which caused a move down to the 37 region. But I am seeing a slight possible bullish divergence here in the medium term, so this could benefit prices shortly, but we'll see what the estimation is on the intraday chart. So looking on the intraday chart, we do have this divergence still. However, with the help of the Ichimoku cloud, prices are being weighed down underneath the bottom border. So I'll just be seeing if we can basically get back up to the $40 psychological handle, and then prices can start really moving again. If we do fall through this line, then I would expect more fresh lows. But if we get a bounce or somewhere approximately around this area, around the $38 area, then a move higher could be likely. So we'll see how that plays out in the near term as well. And I just want to take a look on Citigroup. So let's look on the daily chart first of all. Oops, and apologies for that. Putting a line in straight away. So, we are looking at Citigroup getting back on track with the earnings report. They did actually finish a little bit lower yesterday. As I said, on many earnings report seasons on the Stockwatch videos, it could be the fact that a lot of analysts and investors have actually priced in the expected move. So that's why we don't see such a huge move to the upside when we get a company exceeding expectations on the profitability or earnings per share. So now just looking to see not to drop below this kind of line here, roughly about the $66 area, and then move up to another test at the lower border of the Ichimoku cloud, roughly about $74. So we're looking at roughly an $8 to $10 move in the next few trading sessions, if it can be plausible. And on the intraday chart as well, we are looking at the same kind of scenario, just looking to not break this particular area and then move higher. We are getting a little bit of resistance on the Ichimoku border excuse me, but not too much in the way of divergences, I would say. You know, it's looking like it's going to plan. There was this slight drop that we saw here, so we could be looking at the bullish divergence propelling prices higher. So that's what I'll be looking at in the next few trading sessions, and we'll see if that comes into fruition again as the earnings season rolls on. So that's all from the Stock Watch today. Thank you very much for joining me. If you have any comments or queries, as usual, please feel free to add them to the post, and I'll get back to you as soon as possible. And have a great trading day ahead, and bye for now.